Okay, let's get started. Everyone think of, who do you think one of the greatest entrepreneurs in history? I'm trying to think through all you history buffs. Who are some of the greatest entrepreneurs in history and why?
What do you specifically define as an entrepreneur? Like, if we're going back in history.
That's what last week.
Someone that
No, I know, but I mean,
someone that invented and solved and innovated and created a business. It resulted in a business. So it can't just be like the person that discovered penicillin, because they didn't necessarily turn that into a business.
it's not like science people.
Yeah, I mean, it could be a science person as long as they turn it into some kind of business. Yeah.
So like Steve Jobs,
Steve Jobs. Why would you say he was
I mean, he built from scratch one of the biggest companies today. And if it's one of the biggest today, it's probably one of the biggest of all time.
Yeah, in their garage or whatever. Yeah.
The first one that came to mind was Henry Ford. Whatever you think about him as a person, he had the assembly line would be the innovation that really just allowed his business to skyrocket.
Yeah, and all factories are affected by Henry Ford today.
Jeff Bezos,
Why?
because he founded Amazon and it's one of the most profitable businesses today.
There's a quote, I think might be in the last chapter from Jeff Bezos. He believes that all decision-making teams should be what they call two pizza teams. Basically, you should never have a team that if you were to feed them all dinner during a meeting, it would take more than two pizzas because it makes the team too big. So, all right. Well, Noah, you know, like every entrepreneur, I want to save at least one for Alyssa.
Oh, I feel like I have to say this one though, but Walt Disney,
What?
because I mean, Disney's like an empire now. Like, he's long gone, but like, they basically own everything in the entertainment industry at this point. And like, they're still thriving.
All right. Over here.
Like John Rockefeller.
What did he do?
I mean, he had I'm not a history person. I just know he had a lot to do with the steel industry.
Mm-hmm. He actually, so he was the Standard Oil. So Andrew Carnegie was the steel guy.
Yep.
So, and they both came to their top of their game at the same time because of the railroads. So Carnegie's steel for the railroads and J.D. Rockefeller's started out with basically inventing a way to take the byproduct of fuel oil, which became gasoline, I believe, and that's where he used one of Standard Oil. But then they ended up starting banks and things like that. So yeah. What else? Other entrepreneurs. All the big ones are just about gone. Any others? Elon Musk. Sure.
Whoever.
Dan,
Kathy. Truett Kathy, right?
I don't know.
True. Dan is the son, isn't he?
How do you just know these people?
That's for real though. Like,
How do you just be like, oh, what did you say? Jeff, what's his name?
Bezos.
Like, I just know that. Like, I would have no idea.
Stuff.
because like his name
No,
is the
it's-
company. Like,
It's so, some people are attracted to more trivial information.
what?
All right, well, there's probably some you haven't thought of. I'll show you what Inc. magazine says are the 11 most famous entrepreneurs of all time. This is just, of course, their opinion. Of course, Bill Gates, Oprah Winfrey.
Oh, duh.
That's not over.
That's the richest story. Worth $3 billion. Her family was so poor as a child, she used to tease at school for wearing dresses made out of potato sacks. No, not so much. Walt Disney, number 2. There you go, Alyssa. See, you're vindicated.
Thank you.
J.K. Rowling.
Rowling.
What a time.
Estimated to have a net worth of $1 billion.
Wow. Partially because of.
Wait, what does it say? Like, it's for those specifically? Because she just.
So household name.
But I mean,
Yeah,
Merchandising, have you ever been to Barnes and Noble? They got 7 of the same books.
Yeah, I know,
it's
but I'm
not just the
asking, like,
writing, it's all
yeah,
the stuff
okay,
that
I was
goes
just
with it.
asking,
Yeah,
like,
it's
what
like-
part of it was the entrepreneurship?
Part of Disney.
This one
merchandising.
though, this is one, Kaylin, see this John Paul DeJoria,
Yeah.
you know, from the Paul Mitchell hair care products.
He's known for Paul
Oh,
Mitchell
okay, you
products.
know Paul Mitchell.
Oh.
I mean,
Yes,
the
And
brand.
Hey, I use Paul Mitchell, the green bottle with the tea tree. Oh, it's good shampoo.
Good.
But yeah, this guy, I mean, think about it. There's millions of people that are, you know, are hairdressers and hair, you know, in that field. But you got one guy that literally rose to the top and he's still out there. I mean, he's still going. Madam CJ Walker, this is someone, Black History Month, I think she's first self-made Black female, African-American. Steve Jobs, of course. Andrew Carnegie, we talked about a little bit. His goal was to be a millionaire by the age of 30, and that's back when a million would be like being 100 millionaire now. Benjamin Franklin, that's a historical one. J.D. Rockefeller, very good. Hans Christian Andersen.
Yes.
Self-starter mentality makes him another great example of famous entrepreneur. Grew up poor, but set off alone to Copenhagen at 14. After leaving school, began to publish his writings. See, there you go, Jared. Be like Hans Christian Andersen.
or to be like JK, but it's okay.
Bill Gates, of course, co-founder of the world's largest PC company. So those are the 11 most famous according to Inc. magazine. So now let's talk about, so how many of you are taking accounting right now?
Yeah, what?
2/3.
How many of you are acing accounting right now?
I think I'm gonna take C minus.
So the hard part about accounting, I could hear that Jared was not disguising his disgust. But so I thought that, so I took a master's class in it, and it was definitely my hardest class. Lowest grade I got in my master's program. I used the exact same textbook you guys use, the same Cengage interactive thing. And the hard part is if you get lost on one thing, then everything else after it, you feel like you're lost, and that's really frustrating. So you have to go back and like make sure you're getting the concepts, because it all builds on each other. I know they're also, this is kind of new with Miss Cole teaching and stuff, but so there's a tie-in though here. So with accounting, we're talking about entrepreneurism, but you guys are going to recognize some of these things. This is what a feasibility study would look like. I know it's kind of small, but I'll just read through this real quick. If you were going to start something, you're going to start a business, and the bank says, well, you need to do a feasibility study. Well, it might not have to be this complex, but it would involve brief description of the proposal, the history of the industry, information about the economy, current status, how you intend to produce your product or service, strengths and weaknesses of the business, ease of entry into the industry. So that's just the first introduction. Then your accounting considerations. These might sound a little familiar to you if you're working on accounting. Pro forma balance sheet, pro forma profit and loss statement, projected cash flow analysis. So these are all things that you're trying to come up with these reports, and you don't actually have the money yet, right? So this is pro forma. You're kind of creating like an imaginary budget. Where would the cash come from? What would that look like? Then management considerations, personal expertise, proposed organizational design, potential staffing requirements, inventory management methods, production and operation management issues, equipment needs. Then marketing considerations, detailed product description, identify the target market, describe the place the product will be distributed, price determination, promotion plans. Then financial considerations, startup costs, equity requirements, working capital requirements, loan amounts, what types of loans are they? Break-even analysis, collateral, credit references, equipment, building, finance costs, methods. Then of course, legal considerations, proposed business structure, contracts and licenses, then taxes and sales, property, employee taxes, and then all the other stuff. That's all what would go into a feasibility study. So you might have a great idea, but if you can't pull all the details together, it's not going to go anywhere. And if you're gonna be an entrepreneur and you need someone to invest in you to be able to actually do it, right? So a lot of entrepreneurs don't have their own money. They have other people to give them what's called capital. So to be able to do that, to be able to get capital, you have to prove that you're worthy of someone risking their money on you, because it's a little bit of a gamble. So you have people that are called venture capitalists. They take a chance, they'll take their money, they've made a lot of money. And instead of you going to a traditional bank, you can go to a venture capitalist and they will loan you money at a similar interest rate to a bank, or they own part of your business, kind of like Shark Tank, where they own like 25% of your business, whatever. And, but they're gonna hold your feet to the fire to make sure that you have all your details covered. Some of you were in class last semester when Terry Wild came and spoke. Terry Wild, he works for a venture capital firm called CF Capital. They invest specifically in Christian-owned businesses. So, but they would require all of this and more before they would give you a penny, because no one wants to waste money. People that have money, they have money for a reason. It's because they're smart with it, they've been good with it, and they don't usually invest in losers. So, not losers as people, losers as ideas. So, but to get that money, of course, there's a lot of different ways to get it. Entrepreneurs' personal resources, sometimes. Some people, like some of you, I think 3 or 4 of you were in class last year when I had Carrie and Sandy Peterson come in and talk from Northern Lights Pizza. They'll probably come in again this year. They started by borrowing $5,000 on Carrie's roommate's mother's credit card. They started their first pizza restaurant. And now, you know, it's a multi-million-dollar business. But they started using their own personal resources. Financial institutions, that's the most traditional way. And the US government is set up to try and help small businesses and entrepreneurs and things get started. We have a thing called the Small Business Administration, which will sometimes help you get a very low interest loan if you're starting up something as an entrepreneur. Venture capitalists, which I already talked about. Angel investors, that's a private investor who offers financial backing and they want to have a little bit of equity in your company. So that's like Shark Tank. Initial public offering, this is where you have a company and you need to raise money. And so what you do is you get a organization to come in and say, hey, your company is worth $1 million already. And so what you do is you go out and you say, well, we're going to sell 1,000 shares and each share is going to be worth at least $10 a share. And you're hoping that, you know, that money raised, you can put back into your company. National, state, local government business development programs right here in Ankeny. If you want to start a business in Ankeny, there's all kinds of programs that can help you start. There's all kinds of loans, there's all kinds of grants. Sometimes people like the Bill Gates Foundation will give money to a certain kind of startup because it's solving a problem, whatever. So, matter of fact, sometimes you'll see things like charities, like Abigail and I were talking about inner city charities. Some inner city charities start not necessarily because they have a burden for helping inner city people, but it's because that's where the grant money is at. And so if you want to start something, and it, you know, it's not the best way, but it's not necessarily terrible. You want to start something, federal government says, hey, there's $1 million for anyone that wants to start a women's shelter in Des Moines. Well, don't have a burden about women's shelters, but I need $1 million to run a business so I can employ a certain number of people, and it's a good cause, so maybe I'll go after that. And a lot of people do that. So a lot of charities chase grant money, not based on their mission, but based on where the money's at. It's better, of course, to be mission oriented, but just the way it is. Okay. So what do entrepreneurs do? What kind of plan? Well, the business planning. I talked to you a little bit about Kevin Harrington over at Leaning Tower Pizza. His business plan, his first one, he said he'd never written one. Took him a long time. It's 20, 30 pages long, but by the time he got to his third business plan, he really knew what he was doing. And it was longer. He told me it was like 50 pages. Written document that summarizes a business opportunity and defines and articulates how the identified opportunities to be seized and exploited. So 16%, how much more likely entrepreneurs who write formal plans achieve viability? Basically, you might have a plan up here, but if you can't put it on paper, you're less likely to succeed. Because if you can put it in black and white, sometimes you can see the obvious conflict, right? You can see there's obviously these numbers don't add up. We gotta solve this before we can even go to market. So I think some people think that entrepreneurs just have the golden touch, but really entrepreneurs just do a lot of hard work. They might have a great idea, they might have a great opportunity, they might be able to capitalize, but really they have to learn how to do the hard work. Full business plan has an executive summary and analysis of opportunity, analysis of context, description of the business, financial data and projections, and supporting documentation. So if you went to a bank and they said, we need a business plan, you're gonna have to include all this, yeah.
How do you start all of this research? Like, where are you looking at this information? Like, I don't even know what I'm trying to
That's
ask.
a good question. No, so let's use an example. I recently became aware of a opportunity. There's a local construction industry where they need a specific subcontractor that could just go in and polish marble countertops, right? And so if I wanted to start a marble countertop polishing business, I don't really know much about it, but I think I could probably figure it out. It's not real complicated, but I would need a certain amount of money to get started. And then, so what I would do if it was me is I would look out there and see who else is already doing it and try and borrow as many ideas from what they're doing. Like maybe go to a different town where it's not competitive, like go to Omaha and say, hey, I'm thinking about starting a similar business in Des Moines. Could I meet with you and pick your brain on what have you learned and what, do you have a copy of your business plan? May I utilize some of that information, you know? And you usually, there's nothing new under the sun. You don't necessarily have to invent something. You should be able to get a lot of that information from other people that are already doing it, either a similar industry or the same thing in a different place. Some of these things are your best guess. Executive summary is really just kind of your description, your vision for it all. Analysis of opportunity, that, you know, sometimes you need to get someone involved that really understands how to analyze what's happening in the economy. It might be beyond you. So you might have a great idea to start a marble polishing business. You might not understand the market. So you might need to get an accountant or someone that, you know, Deloitte, which is a big accounting firm, and they deal with all these different construction industries. Maybe they have a report that they release every year on construction, and you could, you know, get data from that. So it's like a research project. Description of the business, that's all you. Financial data, this is where your accounting 1 and 2 comes in. You got to have the accounting chops, and banks and investors and things like that. I mean, they just won't do things without good accounting. And there's just standard practices. And then of course, supporting documentation, and banks and investors love to have supporting documentation. So you have to have an organizational vision. It has to be a broad, comprehensive picture of what an entrepreneur wants his or her organization to become. So if you're really not aiming at anything, then, you know, who knows where this is going to go. So you have to have a pretty crystal clear vision. If you're the entrepreneur, you have to have a crystal clear vision of what you want this thing to look like down the road. Doesn't mean that the final outcome is determined, but at least why do you even want to do it? Where do you want to go with it? That overlaps with the class we've been doing. Okay, so there's all these different types of organizations, right? If you're going to start something, you might start your own lawn care business, and you have to file taxes. But you have to have there's a certain way you have to do it. You can't just say, oh, I'm just, you know, I put all the money in my pocket and then I spend all the money out of my pocket. The government doesn't like that. So once you start growing, you're going to be one of these things. And so there's actually a listing here that says, so these are the different legal forms of how you can organize any entrepreneurial, you know, venture, any business. Sole proprietor, you're the owner. So you are, you know, Noah Zollinger, you know, Inc. You are the company. So if you hire Noah, it's his name, it's his company. He's a sole. All the income and losses pass through the owner and are taxed at a personal rate. So it's just as if it was your own income tax. You have all the liabilities on you though. So if Noah Zollinger Inc. runs over someone's prized rose bush, then Noah Zollinger, the person, is going to buy a new rose bush, right? There is no protection for him. If if the prize rose bush is worth $10,000, then Noah has to sell his own personal vehicle to pay for that, right? There is no like, oh, I don't have the money. Doesn't matter. You have to pay. So the advantages: low startup costs, freedom from most regulations. You basically just, you're just doing it yourself. Drawbacks is the liability. So general partnership, that's 2 or more owners. Income and losses pass through the partners and are taxed at the same rate. So it's just like being a sole proprietor, but it's 2 sole proprietors together. Unlimited personal liability again, though. So now both of these people could be liable. Let's say me and my son go into business together and we both own houses, and through some disaster, something terrible happens, we could both lose our houses because we're both personally invested. The ease of formation, pooled talent, basically you're putting 2 people together to start a company. Limited liability partnership, LLP. You'll see those little letters at the end. Like sometimes you'll see a business card or something, and it'll have that at the end of it. 2 or more owners. Income and losses pass through the partners and are taxed at a personal rate, just like the general partnership. Flexibility in profit loss allocations to partners. So basically, the partners, I believe, can take a salary in this situation. That's kind of the main difference. So basically, in a general partnership, all the money is whatever you say it is. So let's say you made $100,000 and you got 2 partners, you each made $50,000 that year, minus whatever your expenses are. In an LLP, I believe you can say, hey, we're going to pay each partner X amount of dollars, and then we're going to set aside other money for taxes and stuff. Limited liability. So the reason this is a limited liability partnership is basically it protects you personally. So you have to set this up with the government different than the other ways, but what it does is it can protect you from losing your personal assets. So now the company exists outside of you as a person. A C Corp, unlimited number of shareholders. Okay, this is, now you got people that you can have multiple owners, multiple investors. The investors all actually make money off the company. It's a for-profit company, and so at the end of the year or at the end of the quarter, they get a certain amount of money back. That money is taxable, but the liability is spread out so that each individual shareholder is not liable if something bad happens to the company. They have a small amount of liability. An S Corp, that's up to 75 shareholders, very similar to C Corp. But an LLC is the one you're going to see the most when it comes to companies. You'll see, CJM Enterprises LLC. It's an investment company. They invest in buying semi trucks here in Ankeny. Unlimited number of members, flexible membership arrangements. You have voting rights. People can be paid through this. The income and losses passes through the group of partners themselves. And this is where you come up with like profit and loss statements and things like that, which you're learning in accounting. Greater flexibility, not constrained by all these other regulations that these other corporations are. But this is a very expensive way to go. So once you have to get to a LLC, you're going to spend a lot of money with the government trying to get it all set up. There's also other organizational structures that don't apply to entrepreneurs. Like if you're into a nonprofit, that's called a 501c3. That's what most Christian organizations are. They're 501c3s. They don't have to pay certain kinds of taxes and things like that. But really, if you're going to start something, let's say you want to start your own home daycare, you're going to start out as a sole proprietorship. But once you start hiring employees and you start making real money, you're going to start working your way through this, and you're going to land somewhere. You might be a LLC or a partnership, depending on what you decide to do.
I have a question.
Yeah.
For some of the ones that you have to like register with the government, like the LLC and the LLP and the corporations, are those like, especially you mentioned the LLC is an expensive way to set up your organization. Obviously you're taxed in a different way, but are those things that you have to like have an annual license that you pay the government for, or is that just something that like an upfront cost of setting up the corporation?
Thing for in most cases. I mean, I'm talking very generally, and I'm not an accountant, so there's a lot to this, but basically, yeah, you spend the money up front to basically create a structure that the government recognizes that basically gives the government confidence that you are appropriately paying your taxes, that anyone you're employing is getting treated fairly, that their taxes are also being paid, and that your customers are protected because it's not all your own personal assets, it's not your own personal insurance, it's this corporate entity. So you're just establishing an entity, you're birthing this entity, and then it just exists. So we established a 501c3 for our foster care ministry, and it took us a year to get it all registered with the government and everything, but we never have to go back and touch it again. When you do set up some of these different types of structures, though, there are different legal requirements for, like, you have to have bylaws. So you notice even with churches, so churches are incorporated oftentimes. They have bylaws, they have a constitution. Those things exist because the government wants to know that you're going to do what you say you're going to do. So we're very blessed to live in the United States of America. You can have a church or a school that doesn't have to pay property tax, that is not underneath all the same regulations as the federal government, so you get this huge tax break. And all you have to do is abide by the rules that you wrote from the very beginning. It's really a great deal. From what I understand, in Germany and Austria, there are no tax benefits for churches. There are no nonprofit religious organizations that get these same benefits. So we're very, very blessed. As a college like this, I believe we pay little to no property tax on this whole campus. Anything where there's ministry happening, I believe we don't have to pay property tax. Maybe we pay property tax on the empty fields and stuff, and maybe the housing, but we're very blessed. So all we have to do is abide by the rules that we set up in the beginning. So like in our 501c3 nonprofit foster care organization, we set up a board, and we have to have bylaws and rules on exactly how do we put people on the board, how often do we meet, what happens at the meetings, things like that. And so that's why churches have to have business meetings, because the government, if you don't have the business meetings, you're not abiding by your original bylaws and constitution. And then the government's going to say, well, then you're not, how do we know that you're what you told us you said you were? So when you registered. So there are some places some people have been like, well, we don't want to register with the government. Well, then you're also not going to get the benefits that go with being registered with the government. It's not government control, it's really government oversight. And I would make the case that it's actually a great thing. We're very blessed to have that in the United States. Very little control being forced on us by the government, and lots of privileges. So, but in entrepreneurial ventures, of course, it's for profit. So now the government's looking at how much money do you owe us? So churches are different, but for profit, an LLC, for example, they want to know, are we getting exactly what you owe? So that's why they make it complicated. That's why you have to get other people involved, like an accountant and a lawyer and people like that. Organizational structure, we talked about that a little bit last week. So we're going to talk about human resource management next week. But as we get into that, human resource management, if I had talked to someone 20 years ago and said, hey, who's your HR manager? If it wasn't a bigger business, a lot of people have been like, we don't have an HR manager. We have a secretary, and we have a person that does payroll, and that's it. And now HR management, human resource management, is one of the top things. As a matter of fact, there's a big push to move the HR manager to what you call the C-suite. So you guys know what C-suite is? C-suite is the term they use for like CFO, COO, CEO. It's all the people with a C. They're the chief executive officer, chief vice president, chief financial officer. So there's a big move right now within HR to get HR managers to have someone that is watching human resources at that highest level, because your people are your greatest asset, right? They're your greatest resource. And there are so many rules and complicated things about dealing with people as employees now that didn't exist 20 years ago, that it's now its own industry. So if you're looking for a good job and you like working in an office setting and you like working and helping people, HR is a great career field. Next semester, we have a whole class about it. So entrepreneurs, though, have a hard time switching from being where everything revolves around them, to actually implementing good HR practices. Let's see here. Common traits and entrepreneurial personalities. High motivation, abundance of self-confidence, high energy level, great persistence, and moderate risk takers. So not necessarily gamblers, but they're also not going to just sit back, and they have a proactive personality. So that's kind of the, you know, if you were to take cross-section of most entrepreneurs, this is what you would find. Not 100% of the time, every once in a while, you might have someone that's kind of bucks the system a little bit, you know, especially maybe in the technology world or something like that, where someone is, maybe they're not the most charismatic person, but they're really a genius. So that might be the exception. Sorry, I'm just talking through slides, which I promised I would never do, but it's probably the best way to get through this here. So people that are in charge of entrepreneurial ventures, they have to motivate their employees by using participative decision-making. So it cannot be, and this goes back to that Jeff Bezos quote about, you know, it cannot just be one person making all the decisions, but it also cannot be, you know, just this huge democracy. There has to be a small group of people that are able to participate in decision-making. Delegating decisions or duties, an entrepreneur, it would, just like anyone that wants to start their own thing, it starts off with you doing it all, but you have to make the transition pretty quickly where you're able to delegate and let other people do stuff. Giving them discretion over how they do their work, that's a big part of especially starting something up, is you might have the general idea, but the person in the trenches knows how to actually get it done, and you have to give them the freedom to do that. So we're almost done here. Might get done a little early today. Entrepreneurs as leaders, draw out the best in people, create a vision for the organization, and develop teams that are empowered, self-directed, and cross-functional. These are three things. We talk about this a little bit in the project management class about different types of teams. An empowered team is a team that has the ability to actually do something. They don't have to stop and ask permission all the time. Self-directed, they're able to, once they know what the mission is and the objective, they can go and actually make decisions along the way that help achieve it. And then cross-functional. It's not just, you know, all programmers on one team, but you have a programmer, a designer, a marketing person, and they can share each other's jobs. Let's see. All right. The different issues that come up for entrepreneurs, though, managing growth, managing downturns, exiting the venture, like when is it time to sell? You know, most people that get into entrepreneurial ventures don't do it so they can do it the rest of their life. They do it so they can build it up and sell it. Matter of fact, most of the successful people out there, they don't start something and then they just stay with that one thing. What happens is they start it, they build it up, someone else notices it and says, ooh, we'll buy that. So some of you, we had Mark Fincham spoke in class last year in History and Theology of Leadership. He works for John Deere and he graduated from Faith. So he's Brian Fincham's cousin. He, at John Deere, his role is he's a project manager. They team up with small companies, tech companies, to do agricultural things all around the world. And they help build up those small companies, and then they buy the company from the person. So they find entrepreneurs that they can invest in, build them up, and buy them out. And that's a pretty common thing for entrepreneurs is build it up, sell it. Take the money that you made from selling it, go start something else. A lot of entrepreneurs, they're not just about one solution. They like the challenge of finding all kinds of new solutions and stuff. So it's a great way to, you know, for a lot of people to build their wealth. A lot of small, if you think about a lot of small software companies, they build up and then a bigger software company will come along and say, hey, we want what you have. We'll just add it in. I mean, Amazon's probably the best example of that. They just bought so many different companies. Amazon bought a robotics company a couple years ago because their warehouses were using robots and they were buying robots from this other company, and the robots were picking the stock and packing everything. So then Amazon just bought the robotics company. So then now it's within their own company. Here's the final thing, and then we'll wrap it up with this. We'll get done early today. I know Alyssa's tired back there, so. No, I know. I'm just saying. I can sense it. Personal challenges that entrepreneurs face. They have to become pros at time management. So if you're terrible at time management, you're probably not going to be a very good entrepreneur. Identify competent business advisors. You have to have mentors out there. You cannot do this alone. Dealing with conflicts as they arise. If you're one of those type of people that avoid all conflict, entrepreneurism is not for you because it's all about conflict. Developing a network of trusted friends and peers. Entrepreneurs honestly have to have people that are at the same level as them that are going through things at the same time. And that's why a lot of them get involved in like the Chamber of Commerce and things like that, because now they have an outlet to talk to other people that might be going through a similar experience. And they have to recognize when stress levels are too high. This is the one that they probably fail at the most is entrepreneurs, you know, basically stuff all that stress and then it ends up being unhealthy for them. So I think we'll end with that. There's maybe one or two more slides we could have done, but basically entrepreneurism is an awesome concept, but a difficult task. And it's a very small percentage of people that actually are cut out to be entrepreneurs. More likely, people that want to be self-starters and they want to be independent, they might want to be self-employed, they might want to be a small business owner, something that they can buy the package and get it going. But to be an entrepreneur is a unique set of skills and a unique set of problems.